It's not looking good, bruv. It's not looking good. Bitcoin has had a massive retracement back. On top of the Bybit hack, there's also the Donald Trump's news that he's actually going forward with all tariffs. That has caused a massive fear in the market, and everything has started to pull back. Now, it's really important that where we are right now is at a key junction point. We've unfortunately broken the 21-day EMA. I think we might come back over this point and settle there for a while, but there are some key levels that you need to look out for, and I'm going to outline that in this video. The majority of the pullback happened because the S&P 500 had a continuation of a retracement. This is not a good sign, and it is again a reaction to Donald Trump's tariff information. The news that he's actually going ahead with tariffs with Canada and Mexico. This is extremely inflationary, and that puts fears into the market of any rate cuts and causes problems of stagflation. This is not a good sign, and that is why the market is pulling back so aggressively. We'll look at USDT dominance, and it's terrible. It is completely broken through the midweek territory that I was talking about. It's come and touched the 200-day EMA, and to be honest, the next level what we're really looking at is at the 5.34 level. Now, the problem with that is that yes, that's an area that could be of level of weakness, but the level between here and there could cause some exceptional pain in the market. We look at Bitcoin dominance, and it's still the same. It's breaking out of the reversal box that I've stated. It's had a aggressive reaction from that area of support that I was talking about. I thought it would probably break through, but it had a great retracement after the Bybit hack and all these tariff issues, and this higher means very bad for altcoins. And as you can imagine, all altcoins have had a enormous pullback. Now, the area that I'm looking at right now is 62.9%, but to be honest, the 66.15 looks like the key area where this might potentially go to. That is the 618 on the fib retracement, and that is where I would say would be a reversal. But again, from here to here is a large movement, and that will cause alts to have a really serious pullback if we get there. Now we look at the total market cap. It's completely smashed through that midweek territory that I was talking about, the 2.98. Now the next area where I'm looking at is the 2.62 trillion. That is going to be an extremely key point. That will be the area where it will dictate whether we will be turning into more of a bear or more of a bull. The reaction of here is going to be extremely important. We look at others, which is basically the crypto market minus the 10 largest crypto coins, or in essence, the alt market. We've seen it touch this balance, and it looks like it's holding, but to be honest, I think it's going to come down and try and test these multi-year support levels. But again, from here to here, could cause a lot of pain in the market. One massive area that you need to look at in Bitcoin is this multi-year support line. That support line has been broken, and that is a worry. This means that there is going to be most probably a further continuation down, and to be honest, if we get any type of retracement back up here, this could be an area where you could possibly open some very large shorts, because we need to reclaim above here, and I'm going to give you all those levels now. These are all the key levels. I think where this is going to bounce from is most probably going to be around the 83,000 level right there. And I'm going to explain to you why. Because there are multiple levels of confluence at that moment. And I'm not saying it's going to get there. But if it does, I have a feeling there will be a bounce from that moment. How much of a bounce that will be, we don't know. But I think that level there is going to be. And this is the reason why. We have the 0.5 fib retracement that comes to that level there. We have 4 fair value gaps that are also in that area. And most importantly, the yearly open is at that moment there as well. That level there is going to be extremely important. It's the area of high confluence for support, and you should be watching that area clearly. Now, it doesn't mean that we can't go back down to the 77,800 as well. And to be honest, the ultimate dead zone for crypto is 66,000. If 66,000 is broken and it goes underneath it, that is a multi-year reversal, and we're in the bear run. So these are the levels you need to look for, and it's really, really important that you make sure that you save this video and take a screenshot of this, because this is where we are. Now, in conclusion, the market is rough. And the thing is, all news in the market is pushing towards a further retracement. The fact that tariffs are going through, the fact that he's doing all these policies that are going to be inflationary in his market, and the fact that there are all these things of tax and various other aspects causes massive low volume in the market. Low volume means any type of pullback is going to be aggressive, and the bears have the control. And that is a problem, because the bulls can only really play the market once retail and normal investor takes on that mantle as it's rising up, and that is not happening because incentives and sentiment is low. I mean, the fear and greed index is at 25. It's at extreme fear. So we are really sitting in some uncertain times, and to be honest, there might be some interesting things to really start to revitalize your portfolio and see what is the best place to do from here on. Anyway, I'm Alvarez, a seven-figure crypto investor. Like, follow, share, and I'm sorry for this message.